GG, we've had a freaking crazy 24 hours. You've got Kenny Griffin coming out saying Chicago is like Afghanistan on a good day. Apparently in Chicago you watch children acting as soldiers to kill ISIS, but what do I know? You've got Pandora Papers being talked about. You've got freaking my mom posting this embarrassing picture of me from my freshman year in college, and you've got Trey not doing his laundry. What's new? But today that is not going to be the focus of the video. I wanted to, because I have not done this in a minute, take the opportunity to sit down and get back to a bread and butter technical analysis video, and I am actually going to dig into tomorrow, if you do want to see that, the Pandora's Papers. But before we get into that, what is up, everybody? I'm the Trey. We freaking talk fast, so don't skip class. I can by saying I'm not a financial advisor or expert. So take what I say the grain of salt. Let's get into the video. So today, my friends, my family, my fellow girly gang, we're gonna get back to the basics. I want to talk about technical analysis. We're gonna go over a couple different things, right? I want to go over the ortex data. I want to talk about the options flow coming into the stock, and more so looking at historical trend in terms of options flow coming in on particular days and how that correlates to price action, and then finish it off with the charts and what's actually happening here on a day-to-day basis and what you can potentially look for to see that continued trend momentum. Because what you saw here last Thursday, right, was that huge spike up, that huge push in terms of just a random spike, right? It just ran out of nowhere. It could have been failure to delivers getting delivered on. It could have been an options hedging taking place. Could have been some institutions dumping heavy amounts and maybe a couple shorts covered, right? But we're going to talk about the historical trend and how you can actually predict those sort of moves coming and what you want to see in order to know that we are back in a nice uptrend, because this is still a little bit of consolidation, right? This is mostly respecting that up channel, right? It is respecting a beautiful freaking huge macroscopic trend, but in order to get to that next bull cycle, I'm going to show you what you want to see. So before we get into that, let's just start off here with the ortex data. Now, what do we have rocking on right here for the ortex data so far? Currently sitting at 20.24% current short interest free float. I haven't covered this in a few days because there hasn't been a significant change, right? The maximum that it's touched out to, which is a new all-time high, by the way, is 20.92%. Brings you to about 103 million total shares currently shorted into the market. That's what you got rocking right now. Cost of borrowing, nothing significant. Utilization is actually going down, which tells you one main thing. It tells you that there are more lenders lending out stock to everybody who is not necessarily retail, but institutions, so that they can either A, short the stock, or B, hold on to that stock, and you just have more overall supply. More overall supply equals less overall demand, which brings you that lower overall cost to borrow. Now, obviously, this is not taking into consideration any sort of malicious, corrupt activity with naked short selling, puts being hidden in the derivatives market, etc., 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 right? But this does give you a ballpark idea that, A, the shorts have not covered their positions. There's still a whole lot of butt fuckery going on with this freaking stock right now, and not a whole lot has changed in that realm of things. One thing that I do like to check up on periodically is the on-loan average days. And what do you see here is this number has spiked exponentially. And I'm actually going to come over here to the charts really quick, and I want to show you what this looks like in terms of how many days these guys have been holding a short position, right? Because this is actually, the picture's changed a little bit. Now that we have that average day on loan, being 69 days, 69 total days, guys, right? It changes things a little bit here. So I'm just going to draw this out and show you what this would look like. 69 total days brings you to right about here, which brings you an average price of about $36. Now, funnily enough, we're currently trading at about $36 or so, which tells you one thing. This is, once again, one of those pivot points where shorts are in a net neutral position for the average short position or average share alone that is currently being held by the big dogs out there who are shorting the stock, right? So if there's any sort of momentum that comes, that builds pressure, that builds the cost to borrow, that can build momentum, that can really get this moving into the direction that the apes want to see this go in the microscopic and macroscopic, right? Nonetheless, what I think I've failed to do as a YouTuber with my platform in order to be able to talk to you guys on a day-to-day basis is to tell you guys not to stress out too much over the day-to-day price action, right? There's a reason that I try not to focus too much on the minute candles, even the 30-minute candles, the hourly candles sometimes don't even tell the full picture, because in the very macroscopic, right, if your price target's way up here and it's currently trading way down here, you're not there yet, right? Don't stress over these tiny moves unless you are playing options, in which case it's a different ball game, right? But that's entirely your decision. You guys do what you want to do. I just wanted to take the opportunity to talk about that. So Next thing I want to talk about is the overall historical flow for AMC. And there's actually a couple trends that I think are very interesting that you can use to predict future price movements for volatile spikes up. And I want to show you these right here, right? So what do you see? Historical flow shows you the calls and the puts that are rolling into the stock on any given day. And what you see here is this green trend line is call volume and this red trend line is put volume. Historically speaking, you always have more calls than puts because there are more bulls than there are bears for this overall stock, which is just explained very clearly by the price action, right? You got a very bullish overall price action forming itself out over the last freaking 9 months, right? But with that being said, there are times in which you have spikes, even historically speaking, compared to the average sort of volume that you'd get on calls. An example of this, August 24th, what do you see here? Huge uptick. That's a 3x in terms of how many calls are currently being ran into the stock in terms of volume in just a 1 day period. And if you're looking at August 24th, what do you see happen that day, right? Well, look right here. You get a huge uptick in freaking price action, right? That was a beautiful, beautiful freaking day on August 24th, and it correlates very well with that call volume, right? It was a freaking 20% green day, which was solid. Now, another opportunity here. We had that freaking pretty decent sized move to the upside, where honestly, I was caught off guard. I wasn't even paying attention to the call options, well, I wasn't expecting that move, but you did get an uptick in call volume September 30th. Now, if you were to look at the overall price action and look back on September 30th, what do you see here? Matches with the price action, right? There were bulls out there. There were big buyers. They were anticipating that sort of move before it ended up actually happening. So if you want to use unusual whales in order to be able to watch these sort of price action moves before they come to fruition, it is an opportunity. It can give you the opportunity to sort of watch and see what happens on a day-to-day basis. What you have here in terms of historical flow is nothing crazy, right? There wasn't a huge amount of call options volume rolling into this today. We did have a red day. We were down 4.39%, which is, I would say, insignificant. It is obviously a red day, but in the grand scheme of things, where you're waiting for this thing to go, it's a bench along the way, right? It's a marker, and it's nothing to freaking stress out over, especially if your price target is not where we're currently trading. You have done your due diligence, right? You've researched this company, you've researched what this stands for, and you believe in what this stands for. Ultimately, there's two main things. A, the price is psychological, right? Because if you are here to fight against market corruption, a lot of things are wrong within the stock market and the US economy, right? Price is psychological. Second, if the price is trading at $36.77 and you think it's going to trade for that plus Y, this is a discount. That's ultimately what it comes down to, right? And the cheaper this thing is, and the cheaper you can buy it for, especially with any sort of freaking crazy flush that comes, you know ultimately it's going to bounce, right? Because we've seen that. We've seen crazy flushes down. We saw this flush down all the way down to freaking $28, and it bounced all the way back up to $52. Now it's flushed back down to $34, and I would expect the next move to be even bigger than that. But what you're ultimately watching for is not a false breakout out of this trend line, which brings me into the technical analysis. Now, what do we see here? You've got a lot of different touch points. For me to find any significant level of support or resistance, I just want to see more than 3 touch points, and we get that here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different touch points, and then you have this area right here where you get this false breakout, right? It hung over that downside level of resistance for approximately, I would say 7 to 10 days or so. It ultimately ended up being a false breakout on a macroscopic sort of basis to bring you back down to this sort of bull flag setup that we have rocking right now with AMC. So what am I watching for, right? Well, first off, you do want to see a push out of this descending level of resistance with a hold over that level. Now, don't get me wrong. Seeing this right here, these first freaking 1, 2, 3, 4, 5, 6 days, there's no way I would have anticipated that'd be a false breakout, but it did end up being that because you can see it is still respecting that downside level of resistance. That is still a line that is being tracked pretty freaking well. So what I'm watching for personally, can I predict whether we're gonna have a red or green day tomorrow? I would actually be more inclined to believe that you do see a green day, because a trend that I've noticed is that when a stock closes at the low of the day, typically you get what I'd like to call a relief bounce. In the same way that if a stock closes at the high of the day, you typically get a sort of pullback, a relief pullback, right? So I would not be surprised to see this actually get a pretty decent push up heading into tomorrow. Does that mean it's going to hold the entire day? No, not necessarily, right? But that is something that I'm watching for. But ultimately, the macroscopic trend, you do have this demand zone down here. Where does this derive from? It derives from price action that is consolidating before you get a decent sized move either up or down. And you have that right here, right? Consolidated price action and a big move to the upside, meaning that you can expect big buyers to step in at this specific zone, and that would essentially act as a point which you can expect a reversal back to the upside. And I'd be willing to bet that if you look at price action in the past, this level has been respected pretty decently well. So I'm going to drag it back, and we're just going to take a quick peeky weeky, as I used to say all the time on my live streams back in the day, right, at how this level has been respected previously with AMC stock, right? Now, what do you see here? You see a reversal back to the upside. You see a reversal to the downside. You see a reversal to the upside. You see a reversal to the upside, right? This is a level that's very clearly respected, and I would not be surprised in the least bit to see it respected once again if it does ultimately come back down to that demand zone. So that's what I'm watching for. That's the level that you can expect some sort of reversal to come through, and if it's not going to reverse, you will know because it will knife right through that zone and it won't hesitate. If it hesitates in that zone, expect a reversal, right? That's the most picture perfect way that I can put it. And in case that you're gonna know it's not gonna do that is right here, right? So if it's not hesitating, it's knifing right through it, right? It's gonna push through that zone. It's not always gonna respect that to a T, but that hesitation, that choppiness, that consolidation in that level typically means that you're gonna expect a flip in either buyers or sellers on that specific day. And in the situation with AMC, what does that mean? It means that you're gonna expect some freaking some silly chicken hedge chickens out there to start stepping in and either push this up or push this down. So apes, my friends, my family, I'm excited to talk about the freaking Pandora Papers tomorrow. That's going to be the big thing to watch for. So if you do want to watch that, I'm going to do an in-depth analysis. I'm going to read through those documents pretty heavy tomorrow morning and the afternoon. Work has been absolutely crushing my my scrotum for the last week and a half or so. So I'm going to dig into that the most that I can. And that's kind of what I've got for this video. So blah, blah, blah. You know the whole spiel, baby. Drop a like, consider subscribing. Other my friends. Catch you on the next one. Much love, late taps, and peace.